Hey, this is Nick. Today we're digging into QuickBooks Online for builders and contractors, specifically how we can get paid via invoicing. Might seem like a simple concept, but there are a few really specific nuances that are important that we take advantage of, make sure we understand exactly how this works. Let's dig into it right within QuickBooks Online, thinking about invoicing. Now, there's really two ways that you can kind of run your projects. You can run them as fixed price or cost plus. And the way that you're going to run them will determine how you're going to invoice. To be honest with you, the former is a little bit easier, being the fixed price. You're probably going to be making use of some sort of estimates, okay? Now, whether or not your estimates actually exist in QuickBooks or not, you may or may not use the estimates function within QuickBooks itself. It's not a bad place to start if you have nothing else. And again, specifically, I think estimates really work better for like fixed price situations. So what we would do is we'd create an estimate, all right, where you're going to indicate your customer and then various products and services. Now, you're going to have to set up your products and services ahead of time. Okay, we have videos on that. That's really your cost codes, right? That's how you're going to be billing your customer, all right? And that's going to be, every builder has got their different list, but all the things that you're going to be doing. So here I have permits, and then I would have potentially my demolition, and then all these other items that are going to fall in here. And again, I'm not necessarily going to be actually running an estimate out of QuickBooks. I think there's better ways to do that. Spreadsheets, there's Builder Trend, there's Takeoff software. But if you have nothing else, this is not a bad place to go in and start to understand a general estimate of what a project might cost to provide to your customer. If you are more in the trades, I think this is a really great place to be. If we're building houses and doing high-level renovations, I'm finding that I'm going to need something a little bit more robust than this, but this is still really, really useful. Again, if you have nothing else to go off of, this is a good place to start. So you're going to put in all those different lines of things you're going to be doing on the project, and you're going to work through your sales process. So here's my estimate date. I might set an expiration to be 1 month away or so. Okay, I have my acceptance information over here as well, and I can review and send this estimate. I'm going to do that. Now, what I want to do is just be sure we understand how an estimate impacts our books. It really doesn't do much to our books at all. This is an organizational tool. So I'm sending this estimate to my customer here. Okay, I'm going to go ahead and do that. They're going to receive it via email. And it's important that we understand that that estimate, when it's sent and when it's approved, doesn't do anything to my actual books. Okay, so what I mean by that, if I go to my project, go to that 231 Elm, I don't have any revenue recognized. Okay, I have an estimate there. It's sitting there. That's good information for me, but it doesn't do anything else, right? From the customer's perspective, what are they going to see? They're going to see a nicely formatted estimate that you've prepared. And again, you would have set up your look and feel of these forms ahead of time. They're going to be able to go in here and potentially accept or decline this estimate. If they accept it, that's going to go through a workflow for you to indicate that this has been accepted. So I'm going to refresh over here on QuickBooks, and I should then see it as accepted. Okay, great. Now, even when it's accepted, I don't see any revenue for this project. Not yet anyways. Okay, so revenue is blank. So it'd be up to me to now invoice off of this estimate. And this is where, again, fixed price projects, I think this is a really good method to use. You have your estimate living here in QuickBooks, and then you can invoice off of it. Okay, so if I have this $19,000 estimate for this job, I've indicated that it's been accepted. That's great, okay? And now I can convert this to an invoice. And that is exactly what I would do. I'd convert it into one or many invoices depending on my payment schedule. So let's do that. Let's kind of work through what this would be a kind of fixed price project. That $19,000 is not going to change unless we have change orders, but that is going to be fixed in there. So I'm going to go ahead and convert to invoice. And what I'm going to do here is not do a percentage, not do 100%. I'm going to do 25%. So I'm just going to say 25% is due. Okay. And QuickBooks does a pretty good job of tying everything together. So you can see all those line items are now 25%. And then I can set my invoice date and due date, etc. Okay. Now this right here will recognize revenue. Let me save this invoice. I haven't sent it yet, but this will start to recognize revenue if we have tied these products and services to revenue lines, which we should have, okay? So if we look at our products and services here, we have demolition, for example. I would have set this up so that if and when I invoice with this, it goes to some kind of income account, in this case, billable expenses income, okay? So that estimate has been converted to a 25% invoice, $47.50 is going out to the customer. Okay, so at this point, I haven't sent it yet, but saving it, accrual-based accounting, this should now populate into my project as income, $47.50 as income. I do have some expenses. We're going to go through expenses in a little bit, but not quite yet. All right, so that's great. Now, one thing you might do is you might actually invoice way ahead of the project getting started, and you might not want to recognize any revenue at all. And this is actually something I do. So some of us might be booking out, 9 months, 12 months, 15 months in advance. We don't want to necessarily recognize this revenue quite yet. Okay, so what I'm going to do is I'm going to delete this transaction, this invoice, and show you one thing that you could also think about doing, all right, which would be to kind of create an invoice that's more of a deposit invoice. So I can still take this $19,000 and go convert to an invoice, but instead of applying that 25%, I'm going to do a manual for each line. I'm going to create an invoice here, and I'm going to leave all these blank at 0, and I'm going to add a line down here to be specifically a project deposit. Now, I don't know if my project and services is set up yet. Let me see. Yes, right here. So project deposits. And this is going to now be a balance sheet transaction as opposed to an income transaction. Okay, so I'm going to say that I could take that 19,000 as my rate and do 25% as a deposit, but instead of it being recognized to my revenue, it's going to go to the balance sheet. So I'm going to save this transaction and show you what that does. Okay, so that now I have a $47.50, same exact invoice amount. They still owe me the same amount. But if I look at my overview, it's $0 income. Where does that $47.50 land? It lands on my balance sheet. Okay, assuming they're going to pay it, right? I'm going to now have $47.50 increase in my accounts receivable, and then it's going to go as a liability as project deposit. And basically, I'd let it sit there until the project starts, and then I'd back it out. I'm going to show you exactly how I do that next. Okay, and this is really a situation. I'm doing this because I haven't started the project yet, and I'm not going to start it for a long time. I don't want to recognize that revenue yet. I like to kind of be conservative about how I recognize revenue. I'm potentially receiving funds from the customer, but I'm not recognizing the revenue yet. Now, this could also be really important for your taxes, right? So talk to your CPA. If you have a project that's going to start next year, but you receive a deposit for it, you might be able to talk to your CPA to put it on your balance sheet like this instead of recognizing the revenue. Okay, that's something you might be able to do. And then what I'm going to do with this is whenever I start the project, I'm going to take that same exact estimate, and now I'm going to apply that 25%. So let me go into 231 Elm here, and I'm going to take my estimate. And I can do this in a number of places. So it shows up here. It also shows up if I go to open this in a new tab as well. My estimate shows up here. I can do it here. So I'm going to convert to invoice, and the same thing, what I'm going to do percentage, I'm going to do 25%. Okay, now watch this. Create that invoice. All right, and then I'm going to do one more line to back out that initial $47.50. Okay, and so that's going to be that project deposit. Okay, and this would be a way of me saying that, you know what, I've received $47.50 from this customer already. Okay, so I can back that out right here. And when I actually start the project, I might be charging now 50%. Okay, and so they owe me the same $47.50 total, but I'm backing out the project deposit to say I'm now going to have that come off of my balance sheet, and now all of this will go to revenue. So I'm going to save that transaction right there. So now in my project, going to my overview, I refresh. There's my $9,500 now as income. All right. So that's how I do a fixed price project. Again, that deposit thing is something you can do. If you're setting that up, that's going to live here in products and services. Okay. And it's really important. Really, all you're doing is you're mapping this to the balance sheet as opposed to the profit and loss. So there's my project deposit. Right here, when I say that I sell this service, it's going to go to it. They use the term income account, but it's not really income. It is other current liabilities, much like a security deposit would be treated. Okay, so that's fixed price. That's how I would kind of go about it. I'd work the project and I'd incur expenses. The expenses wouldn't go to my invoices. I just invoice off of that estimate. Now I'm going to delete these invoices here. Okay, because I want to show you how I would do this as a cost plus. Okay, so cost plus, I might be estimating here. I might be, maybe not, but then I'm going to be invoicing off of actuals, okay? And so what I might do is say like, there's my estimate. Great, convert to a invoice, and I'm going to be doing a manual line for each. I'll probably do another like, zeros there, but project deposit. I might even delete these lines because like, actually I probably wouldn't want to do that. That's fine. So we're going to do project deposit again. And I'll do 19,000 times a quarter. Okay, so I'll save that transaction. And then all we're gonna do is start to bill actuals. And then what I do with these is I bill for the project deposit, and then I back the project deposit out upon my final invoice or the last couple invoices. Let me show you what I mean by that. So if we're billing actuals, we're doing time and materials, we have to set up QuickBooks so that it, one, marks as billable, and two, adds a markup. So let's look at those settings. We'll go to accountant settings here and go to expenses. And within expenses, we're going to say track expenses by customer, track as billable. Yes, so you got to toggle this on, and then set a default markup. Now your markup will be a default. You can always change it on a line by line, case by case basis, but set that markup. How much are you typically marking up materials, labor, subcontractors, and whether or not we want to track billable expenses in one line or not. I am typically doing this in a single account. You could potentially split that up. I'm going to save that and mark done. So what does this mean? Now I have some already in here. You can see I have one transaction just to demonstrate this. If I go into a transaction, I've incurred an expense on this project, $500. Okay, and I've marked it as billable, the markup comes in. So let me do one of these live and show you what that looks like. So I'm gonna go to an expense. Okay, maybe I'm paying like Lowe's. Okay, where did the money come from? Let's do my credit card. What was the date of the transaction? What did I actually buy? Let's say that I'm doing some framing and I'm spending $1,500 on framing. Right here is where I mark it as billable or not. Now, if you're doing a time and materials project, pretty much every single expense is going to be billable. Mark it as billable. The markup's going to default to 35%. I can change it if for whatever reason it makes sense to change it, but right now I'm just going to leave that 35%. I must indicate the project as well as 231 Elm Street. I'll save and close that transaction. So now this is showing up in my project report as an expense. Now it hasn't yet shown up as revenue. I haven't invoiced anything off of it. So all of those expenses, the $1,500 and the $500 are showing up as expenses here. No income yet. Remember, my initial deposit went to my balance sheet. I'm just leaving it there. I can decide at what time it makes sense to move that to revenue. I could do that at the start of the project, or I could do that at the end, whichever way makes sense for my cash management, my reporting, okay? I'm gonna go to the bank feed and track a few more of these transactions. So go to the bank transactions here. Just like I added those transactions, I can do it right from the bank feed. So I have an expense here. Let's say that this is for demolition. I'm gonna indicate my product or service as demo. And right here, mark it as billable. Note that I don't get the option to indicate the percentage. Okay, it's probably gonna go to my default. We'll check that in a second. I gotta select a customer. Of course, that makes sense. Okay, let's do another one. That's 2154. Let's say that this is for roof. Okay, and do my same customer here. We'll mark it as billable. Actually, let me split this because I have a feeling it's going to give me, when I go to split, no, it still does not give me the ability to change the percentage, which is interesting, but I can still split this transaction. So let's do a little bit of framing, a little bit of roof. Let's say 1 times 1,000 and then 1 times the remainder, which is 1,154. Okay, and this is all going to 231 Elm, and this is all billable. All right, I'm going to split and add those transactions. All right, going back to my project, 231 Maple, you can see the expenses are starting to build up, okay? And if I drill down into these expenses, let's check on that, the markup that it did. So if I go to this 1154, that transaction that we added from the bank feed, let's see what it did with my markup. Yeah, perfect. The markup defaulted to what it should. That makes complete sense. So that's the power of that default. All right, so then what do we do with this? At some point in time, we need to invoice our customer throughout the project. Okay. Now let me go back 1 second and talk about that revenue. If I started this project, it probably makes sense for me to move that project deposit over to revenue. Okay. So I could do that. All right. And what I would do there is I would do a journal entry and say that the money is going to move from the balance sheet to revenue on a certain date. So project deposit is going to go down to 0. All right. So I'm going to debit that, which was 19,000 times 0.25. 4750, and it's going to go into revenue and something like residential remodeling. Okay. And I'm going to put here that 231 Elm. Okay. So this is going to take the transaction off my balance sheet, put it toward revenue. I'm still going to credit it back to the customer. I'm going to show you that in a second, but there's my income. And now that I've started the project, I am going to credit that back because I probably want it to be more specific if I'm doing cost plus. But at some point in time, I'm going to invoice the customer for the costs incurred. So we're going to go ahead and invoice. I'm typically in my business doing every 2 weeks, maybe every month. And we want it to bring in my billable expenses. Okay. So that will happen. There are my suggested transactions, and I'm going to add all. Okay. And I want to invoice. Well, I don't want my estimate to come in. That's the one thing that I don't want. So I want my billable expenses, but I don't want my estimate. So I'm not going to add that. That's why I might not want to link that estimate at all. Okay. Just adding my billable expenses. That estimate coming in would make a lot of sense if it was for a change order, but in this case it doesn't. So there is my quantity with the rate that includes my markup shows up below. So let me save this transaction. All right, I don't know what this one is here. It seems like a gigantic markup that was made by mistake, so let me just check that. Yeah, something weird happened there. Okay, so let's add these in. Okay, so there's my total invoice of $6,300. I'm going to save that transaction. And actually, I'll send it too, just so we can see what it looks like from the payer side of things. Review and send. All right, that's what's going to go. Let me send that invoice. So this is what it looks like from the recipient's side of things, and they can view details. And I got to set up online payment. They can pay it there as well. All right, so now looking at it from the project perspective, you can see my income starts to take shape. I got that residential remodeling here, that billable expense income, and then the markup. So I'm able to see the difference. And that's really important. I think that's absolutely essential. If I go to my project profitability report, I want to be able to understand a percent of income on each of these. All right, now I want to eventually get this out of there. And so what I'll do, let's say I incur just a couple, like let me do one more expense that I incur for like a little electric. $5,000, it's billable, 35%. And I don't know why this markup is kind of freaking out a little bit, but I'm going to change that on each of these. Okay, so I've got my, let's say that that's like my last expense. What I would do on this is on my last invoice to the customer, I would do my total. So I do an invoice for the billable expense, add that one in there, and then I would credit them their, well, I wouldn't, yeah, I would credit them their deposit because they've submitted that deposit to me already. And so I'm going to do 526, and that's going to be residential remodeling. I'm going to credit them back 4750 as a negative. All right. And that's pretty much how I'm going to take that from residential remodeling and move it over to billable expenses income. So I'll save that transaction, and that's what should happen. So my goal is at the end of the project, I move that general like deposit out to 0, and everything shows up as billable or markup. And there's my margin. All right. That's how I would do exactly that. Now you can, and you probably should, you can set up a recurring template to automatically bring in billable expenses to have these invoices auto create for you so you can get on some kind of schedule. I think that's a really good way to do it. And of course, if you're using third-party software, something like Buildertrend, CoConstruct, you're probably going to be initiating these invoices from that software, but QuickBooks is an amazing place to house it all if you have nothing else. So definitely let me know what questions you have on this. Let me know what you need to explain further, and check out our end-to-end course, BuilderBooks Academy, where we go through all of this in extreme detail, and I look forward to seeing you on the next video.